Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello, and welcome to Forecast Update Live, a video series from Everag Insights, where each month we gather to discuss our dairy market forecast. I'm your host, John Spainauer. We're joined today by Erica Medke, Matt Gould, and Phil Plord. To get us started, Erica, please run us through your highlights from this month's forecast compared to last month's.
Good morning, John. Happy to be here today. We do have some changes of note in the forecast. Certainly the markets have moved on us, and in the cheese space, we've moved our forecast up pretty significantly in the next couple of months. Butter, I think coming out of ADPI, a lot of people just threw up their hands and said, this is the butter market. So our numbers are up double digits for the rest of the butter season. Then as we think about the powder space, that's a little bit more bearish as we look at non-fat getting shaved an average of 2 cents through the rest of the curve and a little bit of trimming in the nearby on whey. So the other point to note for those of you who receive our forecast update, you'll get these numbers in that file as well. John wanted us to mention that if you get down to page 11, we do have supply and demand tables with some more additional detail for you there.
Thanks, Erica. Those are some really great charts and some great information that we have in the forecast. Every month, we like to have our panelists take either the bull side of the story or the bear side of the story. This month, Erica has agreed to take the bear side of the story. Erica, take it away and let us know your thoughts on the market.
John, I have to say it's a demand story, and I just don't think demand is very good. And when you start from that premise, it really doesn't matter really what's going on in the supply side of things. So as we think about consumers in the United States, around the rest of the world, money's tight. People are feeling the pinch of inflation. While people do have to eat, certainly trading down, trading out, some curtailment on food service numbers, even grocery trading out of that into some dollar chains or food banks. The general space for food sales just isn't as good. Now, if we look at cheese in particular, domestic cheese demand for the first quarter of this year is down 1.1%. And thank goodness for exports. Otherwise, this market would certainly be in much worse shape. And I think one of the pieces that's interesting to note from a demand perspective, some of the pieces that have kept us going really are based on low prices. So as you think to really record exports in the first quarter of this year for cheese, where we were up 21%, I think that's really driven by low prices. And if you look at promotional activity at the grocery side of things for butter, for cheese, higher prices in the wholesale markets really turns off that promotional activity. So if we can't still have sales stickers out in the grocery shelves or retail promotions, if you can't get that food service promotion going with a cheese or a burger, we're going to be really challenged to keep dairy products moving going forward. The other big root cause, especially as you think about global demand, is China, or the lack of China purchasing. And as we've looked at total trade, total imports into China over the last roughly 3 years, it's been a steady downtrend. The other piece, we look at the most recent GDT. So Tuesday, it was the lowest volume purchased by North Asia since June of 2011. So we know that milk supply within China looks about stable. I don't know that demand is very good. And that means the rest of the world doesn't need to step up and fill any sort of gap because the gap doesn't exist. There's actually a lot of inventory on the books, on the floor in China. Well, 2 years ago, folks coming out of ADPI might have said, China's going to step in, they're going to buy. This year, I would say there's a lot, again, resignation that China isn't at the table.
Thanks, Erica. And I would just add that during ADPI, a lot of people who are very forward-facing to China were somewhat dismal about the prospects of China coming back anytime soon. And I would say yesterday's GDT result really demonstrated that their hunch was correct. Now let's move on to Matt, who has agreed to take the bull side of the story. Matt, give us your thoughts on what's bullish out there this month.
Yeah, and first of all, I apologize for my beautiful view. I am in a hotel room in London today. I think if you listen to Erica, you get or maybe even throw John in there, you get the idea that prices should go to zero. But I think there's two big things that it's powering our market today. So they left out. The first is the supply situation hasn't shifted, and we're still contracting milk supply. When you talk to producers around the country, there isn't a pipeline of growth here in the near term. And then when we think globally, there just isn't a lot of milk out there. And so in that environment, all it takes is even neutral demand growth to turn this thing into a bull. And then I want to talk about, I acknowledge what Erica said about the domestic market. I think we've continued to have customers describe domestic demand with the word terrible on the front of it. But something that has shifted and that I think has much better prospects is global trade. So we have total global trade data for January and February, and both of those months showed total growth in global dairy exports. So while China has been on the sidelines, we're starting to see much stronger demand from other regions. And specifically, I'm going to call out Latin America, which has just been the total outperformer globally, but also from the perspective of our exports. So the fact that without China, we're starting to grow demand again puts out the prospect there. Well, what happens if you even have a modest recovery in China by the end of the year and we don't have that supply response? And that premise of mediocre demand and constrained supply, those two factors together, you can make the case for a bull market here.
Thanks, Matt. Really appreciate the conversation there. Moving on from here, every month, Phil brings us his favorite look. This month, I think, is really interesting. It's a way of looking at the market that we haven't really seen this perspective recently. So, Phil, take it away and let us know what your favorite look is this month.
Yeah, on page 3 of the forecast update, before you get to the tables on page 11, we have our favorite look. Number 1 this month is cheese on sale. And it kind of plays into some of what both Erica and Matt were talking about. Low prices cure low prices, right? It's a central tenet of basic market analysis over time. And we've seen wholesale cheese prices until the past couple of weeks really moderate, not scare anybody. And maybe that's coaxed retailers to up their game in terms of cheese promotions. So 2 things are going on. This graph shows that the average promotional price for 6 to 8 ounce shred cheese at retail slipped down to $2.34 per package on average in April. And that was actually the lowest promotional average price for any month going back to November of 2020. So for a couple of years, we kind of bounced around a little bit, up a little, down a little bit. But it looked like in April, we made a pronounced break to the downside in terms of that promotional price. In addition, the level of activity increased. So we had a 21% increase in the average number of stores promoting shreds in the month of April. Now, with wholesale prices going higher, there's some long lead times and all this. Maybe it's a one-off. We don't know for sure, but it definitely has piqued our interest as a factor. Like, okay, if we're looking for some demand growth, lowering the price at retail can't be a bad place to start. And we definitely see a move lower on cheese.
Thanks, Phil. I really appreciate that. And that's just such a fun way of looking at the marketplace. And I think it has had an effect and maybe will continue to have an effect on our marketplace. Well, that'll do it for this month's episode of Forecast Update Live. Thank you to all of our panelists. Thank you to everyone on the EverAg Insights team for their work on the forecast. And thank you, the viewers, for tuning in. If you don't receive our forecast update and you would like to subscribe, please reach out via email at insights@ever.ag. If you like this video, be sure to subscribe to our YouTube channel, give us a thumbs up, and share with a friend. We'll see you next month for another edition of Forecast Update Live.